Good day, good people, and it's time for another trade review. Now, this one is not one that I'm particularly proud of because it reveals my fundamental flaw. Okay, so this is what we have here. We have it was an uptrend day when it started, and then the price turned around and came back down. There was nothing up here to take, absolutely nothing up here to take. I saw some of my colleagues use this major zone level here to take trades over here. All well and good. You had the FOMC announcement, and then I think the Fed chairman said some stuff too. So that's volatile areas that we want to stay out of. And then after all that, price came down and it struck the demand zone. This is when I got my alarm. Now, in the past, I've seen myself try to take these as breakouts. This is not fit this single line down like here, right here, does not fit the necessary parameters of a trade I'm going to take as a breakout. So I went ahead and stayed out of that trade. All right, so I came back once the zone was formed. I waited because I was planning on trading anything. I waited till the zone was formed, went ahead and drew that, and then took the set me on there. Once this came back, then I came back here to evaluate for a call option. So we're at a major zone. Now I went kind of conservative on how I I guess I saw this, right? So another trader could have called this the zone candle and this the reversal candle, and this would be the confirmation candle. Now, the unfortunate part is if you look at how this confirmation candle was formed, there's a lot of it that is inside and behind the zone. So even if I would count it as a confirmation candle, I couldn't because it didn't qualify. So now we're moving on. Um, I am looking for a possible call option. I went ahead and, and adjusted my stop loss to include the zone itself. Now here's the thing. That's my stop loss. Okay, you see what I'm drawing out. You see the box we have here. So that means that, well, in this particular case, that would mean that the stop loss is at the back of the zone. But if you see my stop loss box, it doesn't go into the zone. It is too far from the zone. It's the distal line, as I call it, that support line. It's too far from the support line. So therefore, it cannot be considered a stop because um, I would like my trades to be less than 30 cents or so on SPY value from the stop. Now, what we have here is an ideal um, confirmation candle. We have a zone candle in this doji, a reversal candle, and a confirmation candle that is completely outside the zone, and it is closing completely outside the range of the reversal candle. So I waited for the 5 to 7 seconds. 3, 4, 5. Okay, so in my eyes, it's go time. I clicked the button. It took a couple of seconds to take. Now, here's the thing. As soon as I clicked that button, then price reversed on me. I had to say in my head, well, I mean, this was A plus setup. Well, maybe not exactly A plus setup according to some videos, but I mean it's an A plus setup. And then suddenly my heart sinks, which you'll see why in a second. You get an impulsive move, impulsive to the downside. So I'm saying to myself, okay, I should just get out of here, right? Close, I get out. I need to get out. This is what I'm saying to myself. But I froze. And as you can see, it's doing all kinds of impulsive stuff. And now I'm completely froze. This is the primary flaw in my trading, guys. Not being able to let the trade go when I'm supposed to. Now, luckily for me, the trade goes back in my favor, and it goes back in my favor by a lot. So I decide, okay, well, it's that take profit. So now it's time. Nope, I'm not going to hit sell market. I am going to set a stop order underneath just in case it keeps going up. Because what's the point of giving, what's the point of not getting the maximum amount of money from this trade? Okay, so I'm moving my stop up. I'm really following the price. I want to move it close, but not so close to it automatically gets triggered. So it got pushed back. So I pushed the stop up more, and it keeps going more. So I push the stop up even more. Let it go, and there it goes. Like I didn't want to allow a whole ton of wiggle room, but I also didn't want to deny myself any extra profit that would have happened if it did continue to go up. And that's the only way I would have. I wasn't waiting for any sideways action. If it kept going up and up and up, then I would have kept following the profit and waited till it come back and stop me out. However, this is the major flaw in my trading: not selling when the price closes past my stop loss. This could have turned out very different. That green candle that gave me all this money back could have done exactly the opposite. Now, I didn't think it would because it had moved so impulsively down, and then it came back up at this point. So maybe it would have, uh, there's a maybe one way or the other, but the idea here is it's supposed to be rules. And if the rule says that you sell your trade, you get rid of the trade once the price makes it past your stop loss, then you need to do exactly that. Um, if I had done that, I'd be $100. Well, technically, it'd be $400 poorer because I would have lost $100 and I wouldn't gain the 300 some odd dollars that I got from this. But understanding that the profit is not king here, the process is king. Profits will come if you stick with your process. So just keep that in mind. This one's a win, um, monetarily, but not necessarily a win with regard to process. Thank you for watching.